guys, welcome back to my channel. Don't forget to like, share, comment, and subscribe this channel. Fed set to reveal parent coming in next stage of inflation fight. Federal Reserve officials are about to put numbers on the pain they've been warning of in recent weeks when they publish new projections for the economy, which could show a substantial rise in interest rates and unemployment ahead of as the estimates price tag for reducing inflation. The U.S. Central Bank will release its last quarterly projection Wednesday following a two-day policy meeting in Washington, where officials are expected to raise their benchmark rates by three-quarters of a percentage point for the third time in a row. Such a move would lift rates to levels not seen since before the 2008 financial crisis. The next phase of the tightening cycle carries greater risk, which will probably be reflected in their revised projections. Inflation has moderated little since the last forecast round in June, and that has pushed policymakers into a more aggressive stance. They're also increasingly adopting old estimates of the relationship between employment and inflation, which may be part of the reason why they're now inclined to aim for a bigger slowdown in economic activity. The higher trajectory for interest rates is going to have a bigger impact. Currently, on employment, we see the unemployment rate coming up closer to 4.5% in the Fed's new forecast, said Brett Ryan, senior U.S. economist at Deutsche Bank AG in New York. They still are going to peddle the soft landing scenario, but it's going to imply a high risk of recession within that. In June, the median policy makers the projection for the unemployment rate called for a half point increase to 4.1% by the end of 2024. Since then, monthly data on consumer price have been disappointing. The latest reports published by the Labor Department on September 13 showed inflation over the last year was still 8.3%. Chair Jerome Powell and other officials, meanwhile, have stepped up public warning about rising rates. In a case speech at Jackson Hole on August 26, Powell suggested they would bring some pain to households and businesses, representing the unfortunate cost of reducing inflation. What Bloomberg Economics says, the overarching theme of the forecast will be prepare for higher unemployment, as it will take more rate hikes and a longer period of restrictive rates before inflation comes under control. Current market pricing for the terminal Fed funds rate is at 4.4%, and policymakers likely will see that as fairly priced. Anna Wong, Andrew Husby, and Eliza Winger, economists. For the full report, Charles Evans, the Chicago Fed president, who during his 15-year tenure has often been seen as one of the central bank's more dovish policymakers, said September 8 that he was optimistic that we're going to be able to navigate this and keep unemployment to about 4.5% by the time we're done, adding that such a scenario would still be a pretty good outcome, although it will be costly for some. But lingering inflation isn't the only data point leading to rising pessimism at the Fed toward the way forward. Record numbers of job roasting are contributing as well, and an increasingly public debate about them since June-May. Portent higher estimates for the unemployment rate Fed officials see as consistent with low and stable inflation in the longer run. Their median estimate for that number has been stable at about 4% since before the pandemic, so an upgrade would mark a significant shift in the committee's thinking. Okay, that's all from me. Thank you for watching. Don't forget to like, share, comment, and subscribe. Thank you.